Good evening, everyone, and my name is Vaqar Khan, and I'm the Equity Research Analyst at William O'Neill India, and I welcome you all to this week's Market Wrap. Without much ado, let's start with the analysis of market behavior this week. This week, Nifty declined by just 0.8% during the week, but remained highly volatile. The index had two strong down days on Monday and Friday, which was partly negated by some up moves on remaining days of the week. On Monday, Nifty declined 1.75% with volumes higher than Friday, taking the distribution day count to 6. On Monday, Nifty was trading below its key moving averages such as 2150 and 100 DMA. On Tuesday, Wednesday, and Thursday, market showed resilience and climbed above its 50 and 100 DMA, but a strong decline on Friday led to market closing below these moving averages. As the meme suggests, it's actually Dar ka mahal, with distribution days count standing at 6 and market below 50 and 100 DMA, mainly on account of global cues, which we will discuss now. In the recent CPI inflation data from US, it can be seen that retail inflation has touched a 40-year high at 7.5%. When last year started, US Fed stated that inflation is transitory, but now it has become financial strains for million American households. The job market still strong in US at 6.7 million jobs were added in 2021 and 4,67,000 jobs were added in January, meant people could spend more from furniture to electronics. Many economists believe inflation will stay above US Fed's long-term inflation target of 2%. The CME FedWatch tool, which tracks the probability of rate change by the US Fed, is currently pricing in a rate hike of 50 bps in the March meeting, which was earlier at 25 bps a month back. On the domestic front, in the recently concluded RBI policy meeting, the MPC kept rates unchanged at 4% and stance is accommodative for as long as needed. Reverse repo rate was also unchanged at 3.35%. But the central bank will be starting variable rate repo operations (VRRO) as the main liquidity management tool. GDP growth of 7.5% for FY23 will be the strongest among major global economies. Inflation at 4.5% is well in range of RBI's target of 4 to 6%. In the recent times, crude oil had tested $95 a barrel as crude oil had jumped around 20% during 2022 as global consumption remained strong despite the spread of Omicron variant. Geopolitical tensions and decrease in inventory stockpiles and many producers have been struggling to pump more oil. Meanwhile, India imports 86% of its crude oil requirements to make petrol and diesel. An increase in crude oil prices to upwards of $110 or $120 a barrel can worsen India's current account deficit and spoil the fiscal maths for the country. Now let's look at the outlook for the market. As the distribution day counts remains elevated at 6, any further increase in distribution day count or further crackdown in markets, we will have to downgrade the market to downtrend. With the elevated D-day count and markets below key moving averages, the market is currently in uptrend under pressure, so investors should proceed with caution going ahead. After an eventful week, it's time to take a break, guys, and enjoy the weekend. Hope you enjoyed this week's market wrap and stay safe and stay healthy.